Most people drift through their 20s hoping that money will just figure itself out. Well, guess what? It won't. This makes your 30s one of the most important decades for building wealth, and by now you've probably learned a few lessons about money already, whether they're good or bad. But the financial moves you make in this decade will either set you up for freedom or keep you playing catch up. So today I'm breaking down the major money milestones you need to accomplish in your 30s to help secure your financial future. And remember, it's never too late to practice good habits, so whether you're in your 20s, 30s, or 40s, this video is for you. With that being said, let's get into the first milestone. The first milestone is to wipe out consumer debt. And just to be clear, I'm not talking about things like a mortgage. I'm talking about things like credit cards, and yes, even the car loan sitting over your head. If you're carrying balances on credit cards at 20%, it doesn't matter what the stock market is doing. You're losing ground faster than you could build it. And this is why your 30s are the decade to say no more. Pay it down aggressively, because every single dollar of debt you knock down is basically getting a return at that same rate, and there's no investment that could beat that. So how do you actually do it? For some people, the snowball method works best. Start with the smallest balance and then wipe it out and use that momentum to tackle the next one. Others prefer the avalanche method. Go after the highest interest rates first and then slowly build your way down. And depending on the debt you owe, if you qualify, you could actually move that debt to a different card at a lower interest rate or even 0%. At the end of the day, whatever method you choose doesn't matter that much. The key is simple, and it's to stop feeding that interest monster. Once that debt is gone, it's like giving yourself an instant raise. Now that money can actually go towards building wealth instead of disappearing into payments. Although these milestones are not being listed off in the order I think they should be done, this is the only milestone I think should be done first. I say this because as long as you're under these high interest loans, it's almost impossible to build savings, but once you free up that cash flow, you could begin going on to any other milestone you want. The second milestone we'll be talking about today is to build a real emergency fund. Life in your 30s comes with bigger responsibilities, whether that's your rent, kids, medical bills, or just the fact that things seem to go wrong at the worst possible times. So when they do, you don't want to swipe a credit card and start the process all over again. The goal here is to have 3 to 6 months of essential expenses set aside. Whether that's put in a bank account or a high yield savings account, this money is not meant to grow, it's to protect you. And if 3 to 6 months feels overwhelming, start small. You can start with $1,000, build that to a month, then 2 months, and so on. In my experience, the best way to do this is to automate it. Set up automatic transfers as soon as that paycheck hits, so that way you're paying yourself first. For example, even $150 a week adds up to $8,000 a year. This milestone gives you peace of mind, because no matter what life throws at you, you won't be knocked off track financially. Now that you've built a safety net, the next milestone is about control. Because if you don't know where your money is going, it doesn't matter how much you make. You'll always feel like you're falling behind. Milestone 3 is not only to build a budget, but to actually stick to it as well. Your 30s often bring some complexity, whether that's bigger bills, kids, a mortgage, or even student loans. Without a plan, your money will probably disappear faster than you realize. But here's the thing, a budget doesn't have to be restrictive or complicated. At its core, it's just a plan for your money. You're telling each dollar where to go instead of wondering where it went. One of my favorite ways to do this is called the 50-30-20 rule. 50% of your money goes to needs, 30% goes to wants, and 20% goes to savings and debt payoff. Or if you really like detail, you could go into zero-based budgeting. This is where every dollar gets assigned a job before you even spend it. The method isn't what's important here, it's the consistency. The goal is to be clear. When you know exactly where your money is going, you can make sure it's lining up with your priorities. And more importantly, it makes saving and investing automatic instead of an afterthought. And a quick thing I want to note here, don't think that these milestones are a checklist. You don't have to completely finish one before you start the next. You could build a budget while paying down your debt, or save for your emergency fund while figuring out your budget. The key is to just make steady progress across the board. Now that you feel like you've got control of your money, the next step is to start putting that money to work to set you up for your financial future. And that's where milestone number 4 comes in. Milestone number 4 is to make retirement investing a priority. Your 30s are a prime time for compound investing. Every dollar that you invest now has decades to grow. And the earlier you start, the more time you leave for compound interest, meaning the less you'll have to put away to reach the same goal. If your job offers a 401k match, that's the first place you start. Contribute at least enough to get the full match, because that's 100% return on investment. It's literally free money. Next, open a Roth IRA. With a Roth IRA, your money grows completely tax-free. And when you retire, you could withdraw it tax-free too. That's one of the biggest advantages available for everyday investors like you and I. The most important part here, again, you guessed it, consistency. Whether it's $200 a month or $1,000 a month, automate your contributions so investing becomes a habit, not a decision you have to keep remaking every month. If you want more information on this topic, especially how a Roth IRA works, I'll link a video right here on screen and down in the description that breaks it down step by step. Now, while you're building for your future with retirement investing, you also need to make sure your financial foundation is solid today. And a big part of that is your credit score, which brings us to milestone number 5. Milestone 5 is to master your credit. By your 30s, your credit score isn't just a number on your phone. It impacts almost everything. The rate on your mortgage, insurance premiums, and even if you could get a job or not. A strong score, think 760 plus, puts thousands of dollars back in your pocket over a lifetime. And that's because you'll qualify for the best rates. So how do you get there? First, never miss a payment. On-time payment history makes up the biggest chunk of your score. Second is to keep your credit utilization low. The number to target is ideally under 10% of your total credit limit. And third, keep your accounts open and active. The longer your history is, the better. Mastering your credit isn't about using debt recklessly. It's about proving that you could handle the responsibility. And when you do, you unlock cheaper borrowing, more opportunities, and peace of mind. Credit is important, but it's just one piece of the puzzle. Another huge milestone to focus on in your 30s is growing your income. Because at the end of the day, there's only so much you could cut from the budget. The real acceleration comes when you raise what you earn. Milestone 6 is to focus on increasing your income. In your 20s, you might have just been figuring stuff out, but your 30s are prime time to double down on your career. This is where you could start to build additional income streams. Learn how to negotiate your salary, take on more responsibility, and sharpen your skills. Even a modest 5 to 10% raise in your 30s can snowball into hundreds of thousands more dollars over your lifetime. But don't stop at your paycheck. Your 30s are also a perfect time to build a side hustle or a business. The extra stream of income doesn't just give you financial breathing room. It gives you options, and here's the key. Don't let lifestyle inflation swallow all your extra money. Redirect that extra income into paying off debt faster or investing more. That's how you create momentum and really accelerate your wealth in this decade. Now that's the trap that most people fall in once they start growing their income. It's lifestyle inflation, and if you're not careful, it could completely erase all the progress that you've made. Milestone 7 is to avoid lifestyle inflation, or as I like to say, defend yourself. Your 30s are probably where your income is going to start growing. Raises, promotions, or maybe even a side hustle or two. That's what I call offense. But here's the thing, offense isn't always enough. While growing your income is important, defense is protecting the money you already have. And I'd say it's just as important, if not more important. If every raise you get just funds a more expensive lifestyle, your net worth never actually moves. You're just living paycheck to paycheck at a higher level. The solution is simple. Every time your income goes up, lock in a portion of that raise for savings and investing, even if that's just 50% of the raise. That way you could still enjoy some lifestyle upgrades, but you're also building wealth at the same time. Think about it this way. Your 20s were about learning how to make money, and your 30s are learning about how to keep them. And avoiding lifestyle inflation is one of the best ways to play defense, and that helps making sure the offense, which is making money, actually counts. Another big milestone when it comes to your 30s is to start looking beyond just retirement accounts when it comes to investing. And that's milestone number 8. To invest beyond just retirement accounts. Retirement accounts like a 401k or a Roth IRA are amazing tools, but they're not the only way to grow wealth in your 30s. It's smart to also build investments that you could access earlier in life. A taxable brokerage account is one of the best ways to start. There's no contribution limits. You could take out profits whenever you want. If you want more information on index funds and ETFs, I'll link a video right here and down in the description below. In that video, I talk about the best index funds and ETFs to invest in to help you make money. This is also the stage where most people start exploring real estate, whether that's a rental property or house hacking. And for some, it's when they start investing into a small business or a side venture. These type of investments can outpace the stock market. The point is, don't limit yourself to just retirement accounts. Having both long-term investments and flexible, accessible investments gives you more options and freedom as you move through your 30s, 40s, and beyond. Investing is key, but not every dollar needs to be locked away for decades. Another big milestone in your 30s is to start saving for things that you care about. Milestone number 9 is to save for your big goals. Your 30s are often when life gets real. You're saving for a home, you're getting married, you're having kids, maybe even planning that dream vacation that you've been putting off for years. These are big ticket items, and if you don't plan ahead, they'll probably end up on the credit card or draining your investment. The best way to prepare is with sinking funds. Separate savings buckets for each goal, whether it's a down payment, a wedding fund, or a vacation. Set up an account and automate it every single month. Because let's be honest, what's the point of taking care of your finances if you're not going to live a little bit? Saving for big goals is about enjoying these things guilt-free, without the stress of debt and without the regret of dipping into investment accounts. Because building wealth isn't just about retirement or leaving money for your kids. It's about giving yourself freedom and enjoying your life along the way. Now, with all these milestones in play, it's easy to feel like you're juggling a lot. That's why the final milestone I'm going to be talking about is keeping score and actually seeing your progress. Milestone 10 is to keep track of your net worth. Net worth is simple. It's everything you own, your savings, your investments, your equity. minus everything that you owe. Credit cards, loan, even mortgage. Now, why is this so powerful? It gives you a clear snapshot of your progress. It lets you know whether you're moving forward or falling behind. Saving for an emergency fund increases your net worth. Lifestyle inflation decreases your net worth. These goals all show up in just one number. Now, I'm not saying you have to obsess about this every single week, but checking it a couple times a year helps you stay focused and keep motivation, or even remind yourself if you're on track or not. It makes all these numbers actually make sense, where you could actually see the score going up or down. It turns money from something abstract to a simple game where you could actually see the score. At the end of the day, your net worth is your big picture view of your financial future. And in your 30s, keeping an eye on it, make sure all your habits that you're building are actually paying off. So those are the major money milestones to focus on in your 30s. And here's something super important to remember. And you don't have to do these in perfect order 1 through 10. In fact, most of these milestones should be done at the same time. The key isn't checking them off one by one. It's to be consistent and make steady progress across the board. Because at the end of the day, the choices you make in this decade will set you up for the rest of your life. Now, in the comments, let me know which milestones you're going to start with or already working on. I reply to every single one. And I'd love to hear where you're at and what your goals are. And if you found this video helpful, hit that like button and subscribe for more investing and money content. And check out the videos I linked down below if you want more information on a Roth IRA and why it's one of the best accounts, or if you want more information on ETFs and index funds and which ones are the best. Thanks for watching, and I'll see you guys in the next one.